How to record accrued pay time off in QuickBooks Online. Keep watching. Welcome back to our channel. I am Ufoma Ogaga, a financial controller helping nonprofit organizations to build sustainable profits and leverage technology to transform communities. In this video, we're talking about the number one questions that my students always ask me is, how do I record paid time off accruals inside of QuickBooks Online? Especially when you're using third-party payroll softwares or third-party payroll providers to track your payroll. I'm going to cover all of that in this video. Now, there's several things that you do need to keep in mind as we go through this process. Number one, you need to make sure that you are well versed and know every details that your employee handbook states. For those of you that are working, accounting professionals working with clients, you need to make sure that you have a copy of the employee handbook from your clients. You need to read it, especially about the paid time off policies. You need to understand what policies do roll over in terms of hours, carry over from one calendar year to the next, or one fiscal year to the next, or maybe it's based off of the employee's anniversary date, etc., etc. You need to know what those policies are. You also need to understand what the payroll schedule of the organization is. Like, what are they using to run payroll? Is it semi-monthly? Is it bi-weekly? You need to know that information. Now, in this video, I am actually going to use Gusto. Gusto is one of the payroll providers that we use here at Goshen with some of our clients. For those of you that are watching the video, please note that the steps I'm going to show you, especially when it comes to recording the transactions, you can do it regardless of what payroll software you're using. My tip to you is to make sure, number one, that the employee handbook policies and procedures matches whatever is in your payroll system. If it's not matching, and if somebody has not recorded the PTO policy correctly in your payroll system, everything that I'm about to show you is going to not work. So you definitely need to make sure that the policy that your organization has matches what is reflected in the payroll system. If you're using QuickBooks Online Payroll, the report you're going to need is called a vacation and sick leave report. Unfortunately, QuickBooks does not convert the hours, the unused hours to dollar amounts for you to make this process easier. If you're using unpaid, the report that you're going to need is called something about pay time off, or maybe time off. If you're using Gusto, the report that you're going to run is called a time off report inside of Gusto payroll system. If you're using any other payroll system, or maybe you're not tracking PTO in a payroll system and you're using Excel, whatever the case may be, use whatever makes sense and use whatever you're using to track payroll. First step you're going to do is verify that the employee handbook policy was set up correctly in the payroll system, and you are also going to verify that everybody's PTO balances are actually correct as of the end of your fiscal year or as of the end of the calendar year, depending on which one you are using for your nonprofit organization. All right? So, enough of the disclaimers. Now, second question that most of my students always ask me is, well, why am I recording this, or when should I record this? You are recording your accruals typically based on your payroll schedule, and if your payroll schedule is one where a few weeks of the last payroll in that month may cross over, you don't pay the person onto the next month, you may need to record payroll, accrue payroll for wages, benefits, and all the things. If you are on a calendar year, typically maybe the first payroll in January, a few weeks from the prior, from December, maybe crossing over or something like that. Okay? Pay attention to the pay periods, pay attention to the payroll schedule. Now, one of the number one things, you don't have to do the accrue every month. That is excessive. And you, especially when you are already using a payroll software. So when you're doing the accrue, you're accruing unused balances. Let me repeat that again. When you are doing the accrue process, you are recording unused balances as of the end of your fiscal year or as of the end of your calendar year. You're not recording used balances and stuff like that. When somebody uses the PTO, that typically offsets the salary and the wages and stuff. So you should be tracking that in your payroll system. So when you record the regular payroll expenses, all of that stuff flows correctly. I'm not going to cover that part. You are only doing the accrual for unused balances as of the end of your fiscal year or as of the end of your calendar year. If you have any payroll cycle or any payroll schedule that is weird, where a few weeks from the prior fiscal year or calendar year crosses over into the new fiscal year or calendar year. All right. Last thing I'm going to give to you before we start recording anything is I am using QuickBooks Online Plus in this demo, but for nonprofit organization, you should be using your QuickBooks Online Plus edition or advanced edition. As I stated before, whatever payroll system you're using, you're going to go into that payroll system and run whatever the PTO balance is. So whether it's sick leave, vacation, or if you have one policy that combines everything together. So you're going to run those reports and you're going to run it as of the last date of your fiscal year ending or your calendar year ending. Now here's one extra tip for those of you that are also doing accrued wages and accrued benefits in addition to this process. What I normally do is we wait till the first payroll that is in your new fiscal year, the first payroll in your new fiscal year or the calendar year, that first paycheck that you process, if you're on a semi-monthly or bi-weekly or whatever schedule you are on, that maybe you have a week crossing over, run that first payroll first. When you run it, it is going to give you what the numbers that you do need to use to, divide by 2 or split or whatever to be able to record the year-end accrues properly. You got to do what I just said. Last thing I'm going to give to you, your auditor is going to ask you to verify all of this stuff that we're about to go through. So even if you're not going through audit right now, for those of you that are, this is one of those auditors' questions that they always ask about, like, well, how did you do the accrual? Show us proof that you balanced it out and show us proof that you tied all the payroll and all the things together. So it is important that you get this right, okay? Enough about all my lovely comments and stuff. So let's go into Gusto. I am using a Gusto demo account and I'm using a QuickBooks Online Plus Edition demo account. There's a lot of fake data in here. This is not real information. All right, follow along with me, okay? And I will more than likely put in the description field the name of the reports. If you're using unpaid payroll, Gusto payroll, QuickBooks Online payroll, I'll put whatever the names of a couple of payroll softwares that I've done this a few times where you can go in to run the reports from those systems. I'll put that in the description field. Okay, so before we go to QuickBooks, we got to start somewhere, right? So in Gusto, when you're in Gusto, remember I said the first thing you got to do is verify that the policies were set up correctly, or even verify that they even exist in your payroll software. So for me, inside of Gusto, you're going to go to where it says Time Tools and you're going to go to Time Off. And when you come to time off, there's a lot of things in here in Gusto. So like, if it looks like I still need to approve all these people, we're going to approve. I'm just going to approve all of this. Now, here's where when I switch to the policy tab, this is where I can see all of the policy that this particular sample company file has. So there's a lot of policies. Many of you watching this video, you may have one policy depending on your state regulations and stuff, where it just says pay time off. Some of you may have sick leave separated out from vacation, and then you may even have a whole personal day or birthdays or whatever the case may be. Just look at the policy. Your goal is to look at the employee handbook, compare what's written in there with whatever you're seeing in the payroll system to make sure that the policy was set up correctly in the first place. That is your number one goal. If it is set up correctly, an extra way that you can verify some of these things, I'm going to choose the pay time off policy. Click this three-dotted icon. I'm going to do view. And when I do the view, you will see that it gives me current balances for each employee. But here's where the policy details are. This policy is telling me it's 1 hour accrued earned per 10 hours worked. And then this one is telling me that the maximum that this person can ever have, or the maximum that anybody within this policy can ever have, is 240 hours. And then it's telling me what happens if they hit that max. For those of you that have crazy unlimited policies where you roll over hours and hours, you need to be mindful that at some point you're going to have to pay that out. And if your organization, especially if you have an executive person that has a significant high PTO, that is a lot of cash that you're going to have to pay out, plus maybe a severance package, plus regular, compensation and all the things. So keep that in mind when you are creating your policy. Always put a cap. Always put a cap. You are not a billionaire organization. And even if you were, that is still a significant amount of money that you do need to budget for that will ever leave your organization if that employee decides to leave. So here for this policy, there's a policy that says the remaining time off balance for this policy will be paid out when the employee is terminated. Okay, we already know that the maximum that the employee can have is 240. Well, as a nonprofit organization, you need to make sure your staff are using PTO. Make it mandatory. They need to take their PTO hours so that you are not having 240 hours that you have to pay out if an employee quits. I'm just giving you some tips there, especially if you did not budget it, add that cash or add that additional expense on your budget. Okay, so we've verified the policy. We are all good. Now, the reports we need to run is you're going to go to the report center. And in Gusto does something that I do love. It gives you a time off balances report. So you click on that, and then it allows you to run it. Now, one step that you do need to do is check this box that says pay time off liability total. What that is going to do is not only show you the remaining balance that each employee has in hours, it's going to show you that amount converted into dollars. Why is this important? Because whatever we're recording in QuickBooks Online is going to be the dollars, not the regular hours. So if you don't want to do the math, try to figure out what their hourly rate is from a salary and all the things to come up with the magic number, use a payroll provider that does a little bit of the legwork for you. All right. Now you come here, you click that. Because this is a sample file, I'm just going to leave all my date range and my years as is. Again, we're pretending like this is our ending of fiscal year. So then I'm going to hit generate report. So when I do generate report, again, the beautiful thing about Gusto, it gives you the reports in CSV, or you can download it in PDF. Please download this in PDF and save it in the last payroll that you process. Save it in that subfolder in your cloud storage system. Your auditor is going to ask for a copy of this. So you better make sure that you have saved this somewhere and you have proof of how you came up with your numbers, especially if you do need to do the conversion from hours to dollars. All right. So remember I said that Gusto makes it easier for us. So here's our pay time off. So here's the accrued time. Here's a column that will tell you how much have been used. And then here's a column that will tell you what is the ending balance. And guess what Gusto did for us? Gusto converted whatever this person's compensation is to an hourly rate and then did the math for us. Okay. And just because I like to verify things, I'm going to take that 29.33 and then I'm going to multiply it by Let's see which one is Gusto pulling. So it looks like Gusto is pulling the ending balance, so it's multiplying that by the ending balance. So you're taking this current rate column and multiply by the ending balance hours to get your total liability amount. So for those of you that are not using Gusto payroll, unpaid payroll, or if you're using QuickBooks Online payroll, where QuickBooks Online only gives you pretty much 3 columns, this is what the policy is, this is how much they have available, and this is how much they have used so far, and then this is the ending balance. You got to do this whole extra 2-column math. Do it in Excel, okay? So while I'm here, I'm just going to look and see what other policies we have. Okay, so we have a lot of this generic pay time off. So good. So you have your report, okay? So you're going to keep your report. You're going to open it up in another monitor or in another screen if need be. Next, you are going to go into QuickBooks Online. Now, in QuickBooks Online, to successfully record this, you need to have already created your current liability account, your accrued expenses account. In this sample file that I'm using, I haven't created a lot of that. So I'm actually going to create it. So click the new icon here, and I'm going to choose other current liabilities. And for me, doesn't really matter which one of these that I choose, so I can just do other current, which is what I normally do. So I'm gonna call my own, you're gonna have a parent header that says accrued expenses, right? I'm not gonna worry about numbers. Again, for nonprofit organization, make sure you number your stuff. But in my example here, I'm not putting a number. This is just a demo stuff. So I'm gonna create, that's my parent. I'm gonna create multiple of this. Again, most of you will have will have this already. So I'm gonna do I have accrued expenses, so I'm gonna do accrued wages year end. So you see I always put YE, or if you're fiscal year you could do FYE, whatever makes sense for you. Put that. Oops, and I made a mistake. I want this to be a sub. All right, so we're gonna change this to make this a sub of our parent. If you have not watched or seen my video on how to create accounts in your charts of accounts, please pause this video and go watch that. That's what we're doing. So I'm just gonna create all the sub that I need for PTO. So I'm just gonna create a sub that says PTOYE. All right, and I'm gonna, for consistency's sake, do the FYE. So there we go. So you need to make sure you have your other current liability accounts. So accrued wages, accrued benefits, accrued PTO, and accrued something else, whatever else you track for your organization. So that's the first thing you do inside of QuickBooks Online, or the fourth thing you're going to do once you get through Gusto piece. Now, the next thing that I need to do or verify is make sure that I have all of my payroll expenses accounts already set up. I believe I already have that set up here. So here's all my payroll expenses accounts. I need to find where my salary is. Where's my salary? Okay, so I'm just gonna change this one to just say salaries. All right, wages. Oh, I have this all weird, but that's fine. Okay, so we got our salary and wages expense accounts. I had to confirm that. And then we have our accrued PTO, other current liability accounts. So now we are actually going to record the transaction. Now, there's 2 ways that you can record this. You can use the expense form. You can use an expense form to do this, or you can use a journal entry. Typically, when I do this, I record this per each employee. And I'm doing this intentionally because we work with nonprofit organizations. So 9 times out of 10, I need to allocate customer and projects, multiple classes, and a whole lot of those things anyway. So when we record journal entries in QuickBooks Online, we usually use, when it comes to payroll transactions, we use the expense form to capture that information. If you have a payroll software that is syncing with QuickBooks Online and does the journal entries a lot better, use a journal entry. I will show you both methods, but this is the method that we are using. So in our expense form, you are going to find whatever the employee's name that you're going to put this under. I don't think I do have an employee. Okay, good. So we're going to pick an employee. We are going to pretend that this is, I don't know, 04/30/22. So this is as of the end of April. Our fiscal year ended in April. When I do this, because this is not real money that is going out of your bank accounts. Let me clarify that. This is not real money that is going out of your bank accounts. This is the equivalent of what we would do if we were recording a journal entry. So what I'm doing here is using my journal account or my payroll clearing account as the intermediary account to capture this transaction or to house this zero sum kind of expense that I'm about to do. All right. So we do that. And because I like consistency when I record things, in the reference number, I always give a little preview of what exactly am I recording. So if you're doing this, you could do fiscal year end PR, which stands for payroll, and then you could do like the initial of the employee, so JW, and maybe put the year that you're accruing based off. So that's, consistency, right? And now we are going to make sure that the process is pretty much pretending as if you just process payroll, but instead of offsetting your typical liability accounts, like your payroll liability accounts, and instead of real money leaving the bank and stuff, you're just recording the fact that you had an unpaid PTO balance as of the end of your fiscal year or your calendar year. All right, that's what we're doing here. So the first line that you are going to do is do the salary and wages, right? And in the description, you're going to say fiscal year accrued unused PTO balance. Okay, whatever makes sense, puts whatever makes sense. So now our number, you remember we're doing this part, by employee, and I'm assuming, again, this is a demo file. So I'm going to take this magic number. So we're going to take this magic number right here. So our transaction, we want to increase the expense accounts. Now, you want to increase the expense account because this is PTO balance. Sometimes I have seen where some clients don't want it to kind of mess up the regular salary and wages. So you may be one of those types of nonprofit organization where you're like, no, create a separate payroll expense account. So you could do you could do what some of our clients sometimes may, they want it separated out for whatever reason. It's still salary and wages, but they, sometimes they want it separated out. So you could do, where's all my payroll things? So you could create another payroll expense account that just says, paid time off or something like that. I don't know. Expenses, you could just do that. This is not necessary, but again, if you are one of those organizations that want to see your paid time off separated out from regular salaries and wages, this is an option that you could do. Okay, so but for me, I don't care about that, so we're going to just use whatever my salary and wage account is in the first one. We're increasing this expense, so we're going to put this here, this magic number. Again, I got that number from my converted out ending balance hours to dollar amount. So again, make sure if your payroll system can run this report, use that report, and if it does the conversion for you, just verify the math and then use it. If you're using QuickBooks Online and it doesn't do the math for you, remember again, you got to do the math to convert it to dollars. Okay, so I'm putting my dollar amount in there, and now you still have to do the other allocations that you typically do. So you still have to assign it to a customer and project if you tend to assign your payroll transactions to things like that. For me, I usually advise all my students, if you're not, even though it doesn't relate to a funder, a unique funder, just use general funded so you get into the habit of adding things in this column. Now, you're still going to peek and do all the class reallocations that you would normally do. I'm not going to go that complex in this video. Go watch my previous video on how I've done that in the past. But I'm just going to pick one program class here and be done. If this person's composition, maybe you tend to break it out by different ratios, like 50% goes to management in general, 10% goes to whatever. Do the split. You still got to do the split. Okay. So for me, I'm just going to pick one program class. Now, to offset this entry, because whatever you're increasing, there has to be a decrease somewhere. Okay. So we're putting that amount there again as our expense. Now we're going to find our accrued PTO balance. Okay, and again, I like to repeat the same number, but this time around I'm going to do this as a negative, and then I'm going to copy the same memo that I had at the top, put it in the description field. My balance here is 0, and then I'm going to repeat the same assign a customer stuff, and then I'm also going to repeat the same class code. For those of you that want me to break this out, let me show you how you do that. So you repeat again salary here. You take this magic number, and maybe you just want to split this by 50%. Yes, you can do calculations inside of the amount field. So you do that, and then you do programs, and then you do the other one. Do that again times another 50%, and then you do general fund, and maybe this is like, I don't know, management in general. That's how you do the splits between multiple classes. Okay, you take the original amounts, figure out what the ratio you want to do, and then do it that way. And then you repeat the same thing again for accrued. So for accrued PTO, we're repeating the same memo again. One number is going, the accrued part is going to be all negatives. And you can verify this at the end. So again, consistency is crucial. So whatever you did on the regular expense side, you got to do the same thing on the liability, using the same class, the same everything. All right. I'm just going to go here, and then we are going to go management in general. Now, before I get out of here, last thing that you have to remember is make sure that your location tracking is set to without donor restrictions. We're recording accrued expenses and accrued liabilities, so it's without donor restriction. Okay. Another thing that I also like to do is sometimes copy the memo and just paste it in the memo field. If you have this report, you can also, if you downloaded this by PDF, you can also save a copy of it here for every little person that you are recording. If you have QuickBooks Online Advanced, you can use the batch enter transaction feature to enter a boatload of this stuff all in one sitting, or use the spreadsheet sync feature that came out brand new. And to find those features, you will click the gear icon on your main dashboard and pick one of the features there to be able to do that. For the batch transaction feature, you're going to click the plus new icon menu to pick that option under the other column, I believe. So if you have QuickBooks Online Advanced, you don't have to sit here and do this one by one manually. You could just create this for one employee and replicate it across multiple employees using the batch transaction entry feature. Okay, before you hit save and close, you always got to review your work. Do I have a payee? Yes. Do you have a payment account? Yes. That is your payroll clearing account or your journal clearing account. Yes. Have you picked the date ending that this transaction to be recorded to? Yes. Have you entered a good naming convention or naming reference number, stuff that you can maintain consistently? I have done so. And again, for me, I usually either put YE, which means year end, or FYE, which means fiscal year end. and then I put PR, which means payroll, and then I do a dash, the employee first and last name initial, and then I do a dash and I put whatever fiscal year I am doing. So you could put like 04, I could have done 0430 2022. Consistency in how you track things is important, okay? And I'm using that naming criteria or that convention mainly because I want to be able to see from a quick glance without having to drill in and open this expense, what exactly was this? All right. And again, consistency in our memo and consistency in memo and description field all matching. There's no issue. I've assigned the customer and project. I've done all my class allocations the way that I want to do it. All right. So now we're just going to hit save and close. So how does this show up? We are going to run a few reports. So here is the accrued PTO that we recorded right here. So here is that. And I'm actually going to run this report. And then I'm going to customize it to also include the expense accounts that we previously recorded. So I'm going to, hit my customize button, and then I'm going to go all the way down. So I got all my accrued expenses selected, but then I'm going to go all the way down to find my payroll accounts, my payroll expenses account, so that they're all part of this report. And once you create this report once, you don't have to come back and update this unless if you add more accounts. So when you create this report once, you will be able to save this and use this as multiple times as you want. So you're doing the accrued wages, you're doing the accrued taxes, you'll be able to save this report and use this as a verification process every single time. So I've done all of that, and I'm going to name my report to say accrued FYE transaction details. All right. And then I always like to see my numbers in red because that's me. A few things that I forgot to add. I also want to see what classes, maybe there's a customer, maybe there's an employee, maybe there's a class. And I also want to make sure that all the fields, all the things that should be completed are completed. So add those columns to your reports. Okay. And then I'm going to hit run again. I don't want to see the cleared button because this is not a real, no money is going out. This was just a zero-sum transaction. So there is my salary and wages, the number for expenses, balance it out with the current liability. And you see I have employee names, I have classes, and I have my division. Once you create this report, please don't forget to hit save customization, add a group. If you don't already have a month-end review, add this, and then hit all or leave it for only you to see. So I'm going to just keep this in my firm only. All right. So that's the first way to record this, all using a expense form. Very clean, very simple. Come the first day of your new fiscal year, you're going to reverse, you're going to undo, reverse everything that you just did. So what I like to do is I recorded this on April the 30th. So I'm going to hit this same transaction because this is already recorded for me and I don't want to waste a lot of time. I'm going to take the shortcuts. So I'm going to hit this and I'm going to do a copy. And you see how it created a copy for me, but it kept everything else. So now on the 1st, so my fiscal year ended in April the 30th. So on May the 1st, I'm going to reverse this entry that I did. So I'm going to continue the same naming convention. FYE PR-JW 0430 20. And I'm going to do RR at the end. RR means this was reversed. If you were doing a journal entry, QuickBooks would put that RR or maybe R at the end so that you know that this is an entry that was reversed. So I'm going to just put an R at the end. All right. Now we're going to do the reverse. So I'm going to decrease the expense and I'm going to increase the liability, so now it will zero out my accrued option. So let's make sure. So we're going to do negative here, and then we are going to do a positive in this. Make sure my numbers are right, and then we're going to go reverse. All right, so again, before we hit save and close, always verify. So now, first entry, we increased the expense, we also increased our liability as well. Second entry, we're reversing everything that we did in the first place. Okay, all right, we got all my things. Again, location tracking without donor restriction, all the things. And now I'm gonna hit save and close, and my balance was 0. So when I run this same report, and I'm running the same report, you now see that as of May the 1st, it's 0. May the 1st is 0. All right, 0, 0. We are offsetting and undoing what we previously did. Okay. All right, so that's how you do all of that using an expense form. And you're going to do that for every single employee you're recording. If you don't want to do it for all the employees, then you may use a generic vendor name called a year-end adjustment, and then put lump sum total, because you're going to reverse this anyway on the first of the following brand new month of your fiscal year or your calendar year. So you may just do that, take that quick shortcut. But for me, especially if you're dealing with grants, funding, and all the things that this will impact, I always like to do it the right way. All right, so if you were doing this journal entry, you're going to repeat the same thing that we just did. So you're going to click plus new menu, and you're going to click journal entry. For those of you that are wondering where's the batch transaction feature, it's going to be under this column in your QuickBooks Online Advanced option. Okay, so when I hit journal entry, we're going to repeat the same thing that we just did, repeating the same process. This time around, we'll keep whatever our journal entry is, and then we're just gonna go keep the same date. If you are doing this as a journal entry, please make sure that the first line is your clearing account, your payroll clearing account, or whatever your journal clearing account that you tend to use. And then I'm gonna paste my same memo again. Under the name column, I'm going to do the same thing again, general funded, because I don't really have any unique customer that this relates to. Location tracking without donor restriction. Class tracking is whatever method of allocation that I normally use for timesheets and payroll applies to this. So I'm just going to pick one. And now I'm going to pick my salary account, and then I'm going to go back here and verify my total number again. We're going to put that in the debits, because again, we want to increase the expense account, and an expense account has a natural debit on the T chart. Okay, so again, repeating the same thing from top, consistency with your class tracking. And now I'm going to put my accrued weight PTO. And because this is journal entry, QuickBooks is automatically filling it for me, because your journal entries must always balance. So it's filling it in for me. If you had to split this between multiple class, again, you would do the same process. Split it, figure out your percentage ratio, and do all of those things. Okay? All right. So this is recorded. My balance at the end is great, and it's all balancing. And now I'm going to repeat the same memo there. And as always, if you're doing it in journal entry mode, don't forget to attach your PTO, this lovely report, as an attachment here. Okay. All right. So all my things are good. I don't need to change my journal entry number. It's following my normal sequence. So I'm leaving that alone. This is all great. Now I'm going to hit save and close. Okay. So the journal entry recorded, here is that journal entry right here. And now here's our customer, but you see it doesn't really have the employee name. That's the difference between a journal entry and an expense form. You only have one column to put a name in. Okay, so let's say it is May the 1st, our brand new fiscal month, the first day of our new fiscal year in that first month, or our calendar year. So I'm going to open up my original journal entry, and again, the first day of the new fiscal year, that first month, that first day, you're going to reverse this entire accrued entry that you did. So here I'm going to just hit reverse. And you see when I hit reverse, QuickBooks automatically changed the journal entry date and automatically added an R to the original journal entry number that I had. And it reversed the debits and the credits for me. Super easy, super fast. One click of a button. So then I'm just going to hit save and close. And again, our balance is now back to zero. All right. So that in a nutshell is how you record your paid time off accrued balances from whatever payroll system you're using inside of QuickBooks Online. If you found this helpful and valuable, please hit the subscribe button, like, comments, leave your comments below. And I do read most of all of you guys' comments in the comment section. It gives me an idea of what types of videos to create. Let me know what else you want to see, and we'll more than likely add that to our list of things to create for you. So again, make sure you read your employee handbook. Make sure you verify the policies in your payroll system. Run the reports. Use the reports. If you need to convert the hours to dollars, take care of that first in Excel. Have that details. Save it in some place so you remember what you did. Come into QuickBooks Online, whether you're using Plus Edition or Advanced. Use the expense form if you want to have things in a pretty format with names and all the lovely things. Use the expense form to create a zero-sum expense transaction, or you can use the journal entry form to create the same thing. And don't forget to reverse that entry come the first day of your new fiscal year or calendar year. All right. Thumbs up this video, like and share it with many people so that we can grow our community.